Hello and welcome. My name is Jeffrey Kennedy and welcome back to another episode of Elliott Wave Junctures. As you know, as a technician, my primary discipline is that of being an Elliotician. I count fives and threes. I'm very familiar with the wave principle. I've been doing it for 20 years. Even so, I also value other forms of technical analysis, such as candlestick analysis, technical indicators, RSI, MACD, many different forms of technical analysis. One in particular, Dow theory. I'm a big fan of Dow theory, especially a very important theorem or component of Dow theory, and that is what is referred to as non-confirmation. And I want to give you an example of what that non-confirmation actually looks like on a price chart. And as you can see here, it actually occurred back in, I believe it was early May here. And let me just make a quick change on my computer. There we go. Got it. Okay. What I'm referring to is this condition right here. Notice we actually have a price divergence. Now typically under Dow theory, if the market is moving up healthy, what you're going to see is the Dow Jones Industrial Average and the Dow Jones Transports move up in tandem. That's a good sign of strength, or it's a confirmation of strength or of further advance or of further decline if they're both declining. Now when they get out of step, when they start making new highs while the other one does not, that would be typically, say, very similar to, say, a divergence if you were looking at an indicator. But according to Dow theory, it's actually a non-confirmation, because what you actually have in this instance here, you have the Dow making new highs, but the transports are not. Okay, now that's not good, and as you can see, what happened in the subsequent weeks, both indices essentially fell roughly about, say, 10%. Okay, now the reason for today's update is we actually have another non-confirmation condition evident on the price charts of the Dow and the Dow Jones Transports. The blue price bars on the bottom represents the transports, and the black price bars on the top, that actually represents the Dow Jones. And as you can see, the high that we made in July in the Dow was above what was experienced in June. Now with respect to the transports here, notice that we have not made a new high above what was experienced in June. So here what we have is a non-confirmation. And actually, again, it's the second non-confirmation. Here was the first back here in May, April, and March, April, and May. Here was our initial non-confirmation condition. Now we actually have another non-confirmation. Now that's a nice price chart, and it certainly has me on my toes. But can we look at the other major indices and make the case that yes, maybe something is going on here. Maybe the market is ready to turn to the downside, because that's what this non-confirmation actually argues for. So that being the case, let's take a look at, say, starting off with the E-mini S&P. Well, if you're familiar with the Kennedy channeling technique, you know one thing, and I would hope you embrace it by now, and that is that counter-trend price action corrective wave patterns tend to be contained by parallel lines. Well, the movement we've seen in the S&P Mini since the June low is very much contained within parallel lines. Thus, this actually argues that this is indeed a counter-trend move, and once complete will be more than fully retraced. Now, a few things I'll be looking for that would further support this idea, or basically the three things that my vision is drawn to when I look at this price chart, would be this. First of all, I want to see prices move below what I would call the lower boundary line of the corrective price channel, and that would be that line right there. Once I can get below the extreme of wave B, that essentially confirms the outlook that the move is indeed a correction and will indeed be more than fully retraced. The third point I'm looking at would be this extreme right here, the July high. That actually acts as my critical resistance. So those are the three levels that I'll be looking at with respect to the E-mini S&P moving forward. And we'll go ahead and examine the NASDAQ, see if the picture is still the same. And again, what you have here is you have an initial price move up off the June low. Subsequent price action is very much sideways. In this instance here, it's an expanded flat, and then you have that final thrust up, your wave C advance. Notice again too that this move, this advance from the June low in the E-mini NASDAQ is also contained within parallel lines, a key characteristic of counter-trend price action. I'll be looking at the same thing, or the 3 points on this price chart as well. Break below the lower boundary line of the corrective price channel, a penetration of the extreme of wave B for confirmation, and if everything holds together, our critical resistance, of course, is going to be the extreme of the July high here, or the extreme of wave C. Now let's also take a look at the Russell, because I like the Russell. And again, what we see here is a move to the upside that is contained within parallel lines, and very much the same shape is very much present. Initial move up, sideways price action, another move up to the upside, and notice how the upper boundary line of the corrective price channel in this instance actually acted as resistance. We've already sliced through the center line of the corrective price channel. I'm looking next to take out the secondary line here, right at, again, that lower boundary line of the corrective price channel. And of course, I want to see the extreme of wave B give way. And as always, this represents my critical resistance point. So if we go back to our original chart here with respect to the Dow and the transports, again, this picture right here is exactly what we saw back in March, April, and May. And as you can see, we did see a nice 10% decline in the indices as a result of that non-confirmation. We have non-confirmation again. And if we look at the individual indices, we see that much of the price movement we've seen in the NASDAQ, in the Russell, and in the S&P as well, the advance we've seen from those June lows very much contained within parallel lines. Again, a key characteristic of counter-trend price action. That about does it for today. Let's keep your eye on the major indices. Something appears to be afoot or amiss as we move into the remaining few weeks of July. And as always, if you want to learn more about the major indices, I encourage you to take a look at the short-term